of, what you said is that post 2019, if this government were to return to power, we'll see a blitzkrieg of reform action. Even over the next few days, we are expecting more decisions on further liberalization as far as FDI is concerned, food, retail, and so on and so forth. But that's incremental stuff over the decisions that have already been taken, which are pretty significant decisions on the FDI front. But if I were to ask you about, 2 or 3 big-ticket ideas that you believe the government should now focus on that could have a lasting and a multiplier impact on the economy.
One was GST, yeah. Labor laws. I think labor laws are all antiquated labor laws in India mean nothing.
But it's a state
America
issue.
has got the freest labor laws, right, and the lowest state of unemployment. So the states, so if Rajasthan does it and Rajasthan attracts investment, then Gujarat will be forced to do it, right? So labor laws, I think this land acquisition law is an easier law. Then we need strategic disinvestment of the public sector. We need consolidation within government. I think government has to withdraw from certain businesses. We need to attract more investment into oil exploration, into every area. So I think what I call second generation reform, GST is one of them. They will play out over the next 2 to 3 years. I say post 2019 there will be blitzkrieg doesn't mean that nothing will happen over the next 2 years, right? And remember one thing, Shirin, we are living in an economy in which 70,000 are born to eat every day. Demand is always there. If the affordability and supply is there, we have had a cyclical slowdown for 5 years, 4 years. So as period comes, every year the growth is going to expand.
The last conversation that you had with us, you said that India is in a similar position that we were in 2002, 2003, and we are on the cusp of a major turnaround. Do you believe that that period starts now?
Well, that period, yeah, I would say so, because see, in 2002, 2003, the savings rate was 30%. The investment in the economy was around 30%, whereas the investment rate went up to as high as 38%. The savings rate went up to as high as 37%, right, in 2007, 2008. So I think both the savings and the investment rate, now we have real interest rates, right? So people will want to save in financial assets. Then the path is upward. And when we reach at 38, 37% both ways, then we could have some sight of a climax in growth. See, in consumption, India has done very well, right? Exports, we're not global, now they are
starting to pick up.
And what we need is a kicker in investment. And when we have
what will provide that kicker to investment?
Demand. And ease of doing business.
So you believe that ease of doing business, at least on the feedback that you get, things haven't changed as much?
Have changed. But
not
that
as
has to be coupled with that has to be coupled with demand, no? If there is ease of doing business, no demand for cars, Maruti is not going to put up a new plant, right? So I think, see, I'm not an economist. I don't predict too much. I judge on broad ideas. I have based my investment in equity all my life only on these 2 facts. That India is going to grow, and tsunami of money will come to the stock market. Because of when the economy grows, markets will grow, and tax-free and ease of doing and good regulation. So why will it not come?
You're talking about taxes, Rakesh, and we continue to hear, despite all the other noises that we hear from the US, even yesterday, President Trump saying that we're going to announce the biggest corporate tax cut in US history. We're still awaiting the details of that. India, of course, has promised to bring corporate taxes down to 25%. We've done it for a certain category of companies, but we haven't done it for the big corporations, so to speak. Do you believe that this is going to be something that must be aggressively now pursued to maintain our competitiveness?
It can be done in a day if we remove the deductions.
But that will anyway...
I think we will eventually achieve it. This 25% will come through it.
Are you watching what's happening in the US closely?
No, but that's all. See, Mr. Trump proposes, but he doesn't get the acceptance. He's going to be a lame duck president. He's going to be able to do nothing. According to me, I can be wrong.
You believe he's not going to be able to do any of the stuff that he said that he wants to do?
I don't think so. Because he doesn't know how to deal with Capitol Hill, and he still thinks government is like business, you can tell anything into anybody. So there's a very big dissension against him.
So just from a flows perspective, what is that then going to mean as far as the emerging markets and especially markets like India?
World markets could correct. This could be the reason. But that doesn't mean correction means nothing. See, you can't time the market to perfection. Correction or rise, it is only shown by price. And every day you dig, so nothing happens in a day. So markets can always correct. There's no question about it.
You know, you said you have great faith in the entrepreneurship of Indians. Let me ask you specifically using one example, because you are invested in a lot of Tata Group companies, and I know that you spoke out quite vociferously when the Mistry battle started, and you came out in support of the Tata Group. Now that N. Chandrasekaran is at the helm of affairs, what do you believe for a large conglomerate like the Tatas? What would you like to see in terms of new strategy?
Well, I'm too small a man to talk and teach Tatas.
You track a lot of those companies. You're invested in a lot of those companies.
Mr. Chandrasekaran is a very capable man, right, and a very humble man. And I think he's fit enough. He'll get his own strategy. Let us comment on the strategy after he comes out.
No, I'm saying, what would you like to see?
More integration. Right? That's a very, very broad question. You know, Shane, and I'm not really competent to answer it.
Okay. So what would worry you today? What is it that would worry you? Domestic factors, global factors?
Only one factor worries me.
Which is?
Which is Pakistan's nuclear bomb. Because, you know, in India, according to me, things can be delayed. They cannot be denied. So maybe my portfolio could go down for a year, and then he'll make up in the next year or the year after that. Doesn't make a difference. But anything, something which can permanently damage the country and lead to a lot of, is Pakistan nuclear bomb. And in the hands of a near terrorist state or a failed state, it's a dangerous thing.
Okay, so Pakistan and geopolitical stability, a big risk factor that you would watch out for. But outside of that, you know, and I go back to the Buffett interview, he said, I don't invest looking at the GDP print. I don't invest looking at who's in the White House. What is driving your investments today?
My country. See, India is going to grow because of what India is and what India's chemistry is. Even if Mr. Modi was not to come, growth would come. Maybe at a slower pace. So I have no doubt about India's growth and bullishness. Maybe it's lesser than what it could be. But then we might have to go to a dictatorial mode, which is not desirable according to me. So I have complete confidence. India has raised its GDP level of growth in every decade since independence. Socialism, Sovietism, Nehru, Shastriji, anybody. So India grows because of India. All factors only accentuate. So I have complete confidence in that. And that confidence cannot be shaken. It has not, I've gone through a lot of bare faces. It has not shaken in 30 years, 32 years. I don't think it will shake.
What was the number? I forget the number that you had given me in terms of where you see the Nifty over the next 10 years. It was a massive number, and I looked at you in disbelief. But where do you see the Nifty in the next 10 years? Given where things stand currently and how bullish you feel?
It should compound at 15% per year. So it can double in 4 years, I think. If we have the economic growth that I feel we can have.
So given the fact that you believe that the kind of economic growth that we're sitting on is only going to improve from
I think we're going to be double digit.
That's what I'm saying.
And ours is going to be far stronger and far more stable than China. Ours will not be based only on investment. Right? It will be based also on consumption. So I think India is going to grow. See, ma'am, the way is upward. I look at it this way.
So whether it's 4 years or not, the Nifty is going to double. Whether it's 4 or 5 years, the Nifty will double.
The Nifty is going to be 1 lakh one day. I don't know when.
That's the number that you're giving me.
The question not whether it will be 1 lakh. Question is when. And I look at it this way, that I'm a lazy character. I don't like to work or be responsible for anything operational. Right? My debt will give me a 7-8% return, 6% post-tax. Equity can give me a 15 to 18% return post-tax, which I have achieved always much more than that. I am happy with that. So whether it comes today, it comes in bulges, or it doesn't come for a year, I'm not worried.
But given the fact that you're feeling this bullish, has the risk appetite resurfaced? Because the last chat we had, you said that now you're taking a little bit of a sort of back seat when it comes to taking risks.
And because we see, if you had told me in December 2013, that same Rahul Gandhi interview, said what to do, why? I said, do Ina, Mina, Mina, Mo, whatever comes by. And most stocks have doubled during that time, or doubled or even higher. But now market is not that valuation. I can say Ina, Mina, Mina, Mo, and buy. So, but I have all my wealth still in equity. It's going to remain in equity. And I have supreme faith in the country. And the tsunami of Indian money will lead to some kind of a madness. We don't know.
Madness usually tends to also have undercurrents of chaos, etc. We don't want to head to that territory.
No, but it's not a question whether you want or not. You head to that territory.
So it will.
It will, but we should be in 4 years, 5 years, 6 years, whenever. I mean, we don't know. You want to have a match place. Every bar, every party, every girl, every boy is going to ask you about equity. That will be the time. I have decided one day I'm going to go into cash. So that will be the time.
And you see that happening over the next few years?
Few means surely in the next 5, 7, 8 years.
Next 5, 7, 8 years. But a more realistic target, at least for the end of 2017, for the Nifty?
Ma'am, the path is upward. That much I can tell you. Now, whether it's going to be X or it's going to be Y, who knows?
10,000?
Who knows?
I know that you also have a deep passion for music, Rakesh. So let me end then by asking you, I asked you for a headline at the start of the show, which symbolizes the mood of the market. Let me ask you to end with a song that symbolizes or reflects the mood of the market.
The song which, mood of the market.
Or your mood.
You know, it has to be more of Kishore Kumar's, you know, we were in Guru Dutt in 2010, 11, 2008.
No tears. No tears.
No. Which song? I don't know which song to. Mind's gone blank. Which song of Kishore Kumar was?
Which is your favorite song? I'm sure.
My favorite song is Mukesh and Guru Dutt and Manade and all that.
I'm sure you can come up with one that reflects the mood.
We'll say कि वो मेरी दोहरा ज़मीन तू हंसी और मैं गवाह. Market is still very young, long way to go.
The market is still very young, long way to go. Rakesh Jhunjhunwala, always a pleasure speaking with you. Thank you very much for joining us on CNBC TV 18 and sharing your thoughts.